Hey guys, and welcome back to the weekly VUSA channel. And today we are going to be breaking down every investment that I've done without hype, without flexing, and without pretending you need thousands to get started. So we're going to walk through what I did in March of this month or this year, and how the portfolio performed, why I started a brand new Trading 212 Pi that everyone can copy, which is going to be down in the link description. Even if you invest in just a couple of pounds a day, or a couple of pounds a week, or a couple of pounds a month. So we are going to explain how you can do that, and we're going to get straight into it. First of all, though, there are some free shares for you available with Trading 212 and Robinhood. So if you want to go and check those links down in the description below, you can get on Robinhood up to $175 worth of stock, and on Trading 212 you can get free shares worth up to £100 as well. So let's get into the juicy stuff. There's been no sales this month, and I'm going to try and keep it this way for the whole year. I don't really want to keep selling the stocks just for the sake of it. So no sales this month, which means there's no shares sold, no amount gained. Basically, this is the most important thing for most new investors. They need to constantly think that they need to buy and sell to do something. But the truth is, doing nothing is often the best strategy. You know, just letting your positions grow, adding consistently, avoiding emotional trades is where the real compounding starts. And the main buy, and I think everybody knows it was coming, is Carnival Corporation. Now, this is I think this is now my overweighted position on my eToro portfolio, because I use eToro and I use Trading 212. Now, due to recent sell-offs of the market, Carnival Corporation is actually worth, I think, 53% of my portfolio. Quite bad for just a single stock pick, I know. But I do believe in the stock. I believe it's got a long way to go, and I've always been investing non-stop each month in Carnival Corporations, and I think that's why no matter how much I invest in dollar cost averaging, it's just gone up and up and up, and we've got this far. So what have I done? Well, I picked up just over 6 shares, which is amounted just to £110 or $146 today's current conversion. It means we've got over 56 shares. We've got a total investment of $1,240, which is just below £1,000. That fluctuates, of course, due to the FX conversion. But the total value at the time of recording was $1,428, which is just over £1,000. But I had noticed this morning that the actual stock has actually gone up, so it would have actually be a lot better. But I kind of wanted to highlight that it's not always rosy dory. You know, stocks do go down. You know, you do lose value, and we will get to it at some point. But you wouldn't believe that Carnival Corporation is my worst performer right now this month. And if anybody can guess it without cheating before we get to that slide, then of course that would be brilliant. But if not, you probably will go to the slide and see what it is. But comment down below, and I'll see if anybody got it real close indeed. And if you do like this video, of course, leave a like, hit the subscribe button, and comment down below what your favourite stock is right now that you added to your portfolio. But the reason why I keep adding to Carnival Corporation is because if it's long-term turnaround play. It was one of the best cruise stocks, I believe, before the COVID situation. They are clinical, they are heavy debt loaded, and they are volatile, but they recover hard when the cycle flips. You know, I'm not buying Carnival Corporation because it's safe. I'm buying it because I believe in the long-term rebound, and I believe that with its management, this is a good stock to dollar cost average in, and especially when it's beaten down as well. This is a perfect example of buying when it feels uncomfortable, which usually when valuations are the most attractive. Now we're going on to the Trading 212 Pi now. I'll go into more depth in a little bit. But on the Pi, I'm going to be trying to invest as much as I can of my spare cash into it. Now we have started off with the Vanguard S&P 500, or the VUSA, which is a UCITS. It's for basically UK and I think EU investors that can't invest in US stocks. Well, you can, but you just have to pay like higher fees, or you have to get your tax withdrawal for dividends. So that's why I've picked VUSA. It is pretty much what it is. It's the SP 500 ETF. It's the backbone of the pie. It's long-term, diversified. It's boring, but it's reliable. So if you want exposure to the biggest companies where I have to pick them, or like pick them out of buckets, you know, this is the simplest way to do it. Now, I have only put £10 in, and the shares that I've got is just 0.1. The total value is 9.9, which is fine. You know, I've only invested a small amount in it. but it hopefully will build time after time. Now, the other stock that we have picked is Main Street Capital, or stock ticker is MAIN. Now, once again, we've done £10 into this. Now, the thing I love why Trading 212 is now a new addition to my portfolio is because you can just invest in your GBP and you don't have to do any FX conversions. You don't have to go into dollars. It's just your pounds. So there's nothing no long way to do it with your dollars and all that and having to try and convert them back. It's always going to be in pounds. So we've got 0.2 shares of MAIN. Now, the reason why I put MAIN into the pie is because it's a monthly dividend payer. It balances the pie very nicely. We get income, stability, and it's completely different style growth compared to VUSA. And I do love the stock because I think the management is one of the best REITs out there. And the way it has been managed through difficult times and the dividends still keep growing, I just love the stock because of that. So we get into the portfolio performance. And as you can see, this is only on eToro. So as you can see, the Carnival is actually down 18% this year. Well, this month actually. I think it's actually down nearly 20 odd percent due to the sell-off. But it was the worst performing stock of this month. Now, that is probably guaranteed because it's a clinical stock. It's a cruise stock. So when it goes down hard. But my best performing stock was actually Booking, which is at minus 1.26%. Now, I did only add that recently, so this probably hasn't had much time to go down or up, and I did add it when it was on its way down anyway. But comparing to the benchmarks, as you can see, we are miles off the S&P 500. We're at minus 16% overall, where the S&P 500 is actually minus 4%. The TLT, which is the interest rates, basically, that's at minus 4%. VU, which is just the S&P 500 ETF, is at just minus 4%. And gold is actually minus 11%, so we're not far away off from gold, but we are still down and we're still losing against the market. Now, of course, markets do go up and down. They don't go in a straight line, so your portfolio will always be green. And there's always a point trying to beat the market. As long as you're positive, as long as you're green for the year, and you keep making your money, that's the best way to do it. Not everyone can beat the market. So, if anybody wants to know what my portfolio tracker is, I use Stock Events. Now, I'll leave a link down in the description for you to go check out. It's not sponsored. I just love the app. It goes on your phone, goes on your computer. It's just so simple, and you can also see dividends as well for each month, how much growing, where's it coming from, which sectors it's coming from as well. I just love it. Go check it out. Links are in the description below. So that brings us to March total buys plus sales. So we've actually put £130 into that. So it's just below $200 into total buys into stock. So nothing crazy, just consistent contributions. Now, this is where we get a little bit juicy into the Trading 212 pie. So I want to show you this is actually realistic because not everybody can invest £200 a month, £300 a month, even £1,000 a month into stocks. So I kind of thought, what was the best way to show that? So I opened up a Trading 212 pie, and we're going to show that not everyone can drop £100 into the market, but with small contributions, you can actually, be consistent with it. It can actually be a lot of difference. Now, I'm going to aim to invest about £2 a day, or whatever spare cash I have at the minute, lying around, and the goal is simple. Build wealth slowly, stay consistent, remove the pressure, and show that anyone can do this. Now, I know not everyone can do £2 a day, so at the minute, we are just going to be investing the spare cash that we have at the end of each month to go into the pie. Now, the reason why, once again, I picked VUSA and MAIN gives me long-term growth, monthly income, diversification, and just simplicity. I can just ignore it. I can just put on auto invest. I can just go, look, invest £2 a day in it, and I can ignore it. I don't even have to log in. It does it for me. So this is a structure that anyone can copy, even with a tiny amount. Link will be down in the description for the pie if you want to go and copy that yourself. Now, I do know there's a lot of other pies on there, and if people do want me to do a video about how you use Trading 212, then of course comment down below, say I want to know how Trading 212 works, and I'll go and do a video on that, especially when I'm probably going to be using Trading 212 a lot more alongside eToro. So what's my final thoughts? Well, realistically, the final thoughts on the pie is basically, once again, I just want to show you that it's very realistic. Everyday investing is exactly what it looks like. And, I just want to keep it relatable. If anybody has any ideas about how to show the content, I know there's a YouTuber called Bob Sharp. He does investing every day in VU. and he shows that like every 4 months, every 3 months or something. Shows you how it's done, how it's doing against the market. Now we could do that. We could do something like that. But of course, I want this to kind of be like something that you guys can relate on. So anybody who's got any ideas, of course, comment down below or comment down in the community, and I would definitely love to hear your thoughts. Now, I want to make sure that you guys have enjoyed the video. Like I say, you don't need a big salary to start investing. You don't need a lot of money to start investing. You don't need perfect timing. You don't need to pick the next Tesla stock. All you need to do is a simple plan, a structure that you can stick to, and a discipline to keep you going. So the new pie is the way of proving that the small money still grows. And if you want to follow along and copy that, then of course feel free to. If you want to build your own, you absolutely can. Links down in the description if you want to go and check them all out, including other things as well that you guys can find helpful to help you guys out. Now, remember, I'm not a financial investor again, so please do your own research. And I'm just doing this to allow you guys to follow my journey for what I'm researching, for what I learn, and hopefully to teach you something new on the way too. But if you found this very much helpful, like I say, drop a like, hit the subscribe button, let me know as well what you bought in March. Thank you for watching, and I'll see you on the next one. Goodbye.